I am going to give you a simple yet super effective trading strategy. I use this strategy almost every single day, and over the last 2 years, I've been able to hold an 85% win rate the entire time. If you don't believe me, I'll let the results speak for themselves. Today, I alerted SPY puts using this exact strategy, and here's how that went. Easy 120%. Now that's not all. 15 minutes later, I alerted SPY puts again. 85%, we take it and leave. In the matter of 1 hour, I was able to take over 200% with a $3,000 position sizing. Now, if you do the math, that is $6,000 profit from this exact strategy. Now, I do want to clarify that I ended up only profiting about 4,500 from those 2 trades, just because I took trims along the way the whole time. But if I would have held my full position size the entire time, I absolutely could have broken that $6,000 profit. So now let's not waste any time and get straight into it. So to start this strategy, here's what you're going to need. You are going to need the MACD indicator, which is also known as the moving average convergence divergence. Add that to your indicators. That is something I already have, so I'm not going to add it. And next, all you need is 2 more of these. We need EMAs. These are exponential moving averages, or moving average exponential. You're going to click on this and add 2 of them because we do need 2 separate moving averages in this situation. First, we're going to set up the moving averages. You're going to need the 9 EMA, which should be set up like this: length 9, source close, and offset 0. You can change the color to whatever you like. Preference, it's all just preference. I use the baby blue. And then next, we are going to set up another EMA, which is going to be the 200 EMA, and this length you're just going to change to 200. Finally, the MACD that we added, we're going to go ahead and click on this. You're going to want the fast length to be at 12, the slow length to be at 26, source close, signal smoothing 9. This should all be standard, but if it's not, just make sure you copy what I have. And then again, you can change the colors if you'd like, but I didn't change the colors personally just because it's a MACD indicator all the way down here. Now that we have these set up, it is time to explain how we are going to bang these out with an insane win rate. Now, the first step is going to be identifying MACD. I'm just going to go ahead and open this up so you guys can see it a little bit bigger, but this is something you need to know. When you see a green mountain like this forming and slowly pushing up, that means that there is an uptrend forming and a lot of buy side pressure coming in. Now, vice versa, when you see the buy side start to die and you see the red incoming, this means that there is a downtrend coming and a lot of sell side pushing the market down. Now, if we close this up and just look at the bottom here, we can see that this perfectly represents price action here. We see a big red dump for a while, big red dump, green squeeze incoming. There you go. We go into an uptrend, another downtrend here. This goes red, and so on and so forth. Now, you're going to see a lot of different candles and different sizes here, but to put it in simple terms, the bigger these candles get, the more momentum there is on the sell side or buy side. So if there's a lot of big green candles pushing up, that most likely means that in this area, there is a lot of buy movement. Now, typically when this happens, you are going to see these 2 EMAs. These are not EMAs that we added. These are EMAs that come directly from MACD's indicator. You're going to see that in most cases, every time we go from red into green, you'll see these EMAs cross. The key point here is that whenever you see these EMAs cross, it most likely means that there is going to be a structure shift in the market. Here's the only problem with that. Let me show you. Now, you can see here that right at this point, we got a crossover, which means that most likely it should be going into a downtrend. Now, by the time you see this cross and by the time you get to it, you will see that if you entered anywhere in this candle, you most likely would have gotten stopped out. So instead of a continuation and a push down further, we ended up pushing down a tiny bit, which maybe would have gotten you 5-10% maybe in profit at most. But then we ended up reversing completely at this point and pushing all the way back up here. And that is not good. So here's how we're going to prevent all of that risk in 3 steps. Step 1, only buy calls or go long when these 2 lines cross below the 0 line of MACD. Now, I know that sounds a little complicated, but it's not. The 0 line of MACD is basically just this line in the middle, in between green and red. That is all it is. So if you get a reversal and a cross of these lines below the 0 line, calls are going to be safer. But I'll show you over here, we are above the 0 line and it crossed up. That is not a good time to get into calls. Yes, maybe this play would have worked out potentially if we look at the charts, but it is not a good way to mitigate the risk. So make sure if you are going in calls, only enter when these lines are crossing below the zero line. And if you're going into puts or you're going short, only enter when these lines are crossing above the zero line of MACD. Step 2, only buy calls when the market is in an uptrend. You never want to fight the trend because in most cases you will see a big downtrend like this and maybe a push up of MACD. Maybe it crosses for a little bit, but then it dumps back down. Same thing goes for puts. If you are in an uptrend, don't ever buy puts. And don't ever fight the trend using this strategy. And step 3, this is very crucial in my opinion. I think this is one of the most important ones here. Only buy calls when you are above the 200 EMA. Now we can see here, this purple line is our 200 EMA. And if we take a look at this setup right here, as we can see, MACD is crossing, but it is below the zero line. So that is good. That means that we can get into calls here. If we would have gotten into calls at this exact point here, right at the cross, we would have gone up a big push because we are in an uptrend overall. Yes, we did have a little bit of a pullback, so it was a little bit risky, but keep in mind, key thing here, we bounced very, very, very hard off of this 200 EMA. And on Friday, I did actually take calls here and make a pretty solid play. Combining all of these things together will give you almost a perfect strategy. Like I said, I use this all the time and I have an 85% win rate overall with this strategy. Now that we understand the strategy, that's not quite it, because risk management does get involved here and it is very important. So my risk management setup is very simple, but still super important. Now, let's just say I wanted to get into this play here, for example. We are up over the 200 EMA. We have a cross below the zero line, which means that we should be going up, and we are in a previous uptrend, as you can see, fully bullish engulfing, and we are in a new uptrend from a reversal. Now, I like to keep my stop between 20, as you can see, stop 0.20. Between 0.20 and 0.35 is typically where I like to keep my stop loss. But again, this depends on the time frame you're trading on and the actual setup. But for now, we're going to keep it at around 25. You can see here, my target is 1.5. This is very, very big. In most cases, I have tested this strategy out hundreds and hundreds and hundreds of times. And in most cases, 1.5 seems to work out really, really well for me, which in this case is also equivalent to a 6 risk to reward ratio. Now, again, like I said, it really depends and it really varies on where my stop loss is going to be. But as you guys can see here, we have the purple 200 EMA, and I would keep it around somewhere here, just so that if we did come back down, we might get a little bit of room to bounce. But on average, you will see this trade setup have a risk to reward from anywhere between 2 and 6, which in that range is really, really good for a trade setup. Now, I want you guys to keep in mind that throughout this entire trade, I am taking trims. This is my price target to be completely out. Although in some cases, I will let a couple runners go. If I made a lot of money off that trade and I'm super happy with it, I might let 2 or 3 contracts go and see if they can continue up a little bit more for a little bit more profit, which it looks like it would have. But it's also important that if you are going to do that and follow what I do, that you keep moving your stop loss up as you go. That is going to fully mitigate your risk. I would say once you're up like 15, 20%, you want to move your stop loss to break even for sure. And once you're up even more than that, 50, 60, 70%, just keep moving your stop loss up so that no matter what, you are continuously securing profits. I really hope you guys enjoyed this video on my trading strategy. I hope it helps you out. Like I said, I've been using this for the past 2 years and it has worked absolute wonders. But the key thing here is that you just have to have some patience and you have to make sure that the setup is perfect, just like I explained in that 3-step process. If you guys are new to trading or you're looking for help, or even if you're advanced in trading and want to be surrounded by an amazing community, I promise you will learn stuff every single day. I've decided to open up free trials for my community so you guys can check it out completely for free. If you like it, you stay. If you don't, no big deal. The link is going to be down below for the free trials. If this strategy helps you out, let me know down below in the comments. And if you guys enjoyed this video, please leave a like and subscribe. I appreciate you guys. I will see you in the next video. Peace out.